Today, we're diving into one of the most fascinating corners of the internet. It's a place where people literally put their money where their mouth is to forecast the future. We're talking about prediction markets, and we're going to figure out, are they a powerful tool for finding the truth, or are they just a new kind of casino? Okay, let's just jump right in with a question that feels like it's ripped straight from today's headlines. Will we see a massive leap forward in AI this quarter? I mean, it's a question with a real verifiable answer, eventually. But what's the probability right now? Is it 30%? 60%? And that is where things get really interesting. What if, instead of just guessing, you could actually buy and sell shares based on what you think the answer is? Well, that's the core idea that powers everything we're about to explore. So let's start with the absolute fundamentals. Prediction markets, they're not about some vague speculation. They're actually structured venues designed to turn future events into something tangible, something you can trade. So what is a prediction market exactly? Well, at its core, you're trading contracts tied to a very specific outcome. So imagine a contract for yes to our AI question is trading at, say, 60 cents. That price isn't just a random number. It's the market's collective guess. It implies a 60% probability of that event happening. Now, if you're right, your 60-cent contract becomes worth a full dollar. If you're wrong, it's worth zero. It's really that simple. And this is a brilliant way to think about it. Instead of trading shares in a company like Apple or Google, you're trading shares in an outcome. Will inflation be above 3% next month? Will a certain movie win Best Picture? These real-world events literally become assets with a price that moves as new information comes to light. All right, let's tackle the elephant in the room, the big question everyone asks. Isn't this just gambling? And look, it's a fair question, but when you look at the mechanics, you start to see some really fundamental differences. Let's break it down. Okay, check out the key difference right here. In traditional betting, the house, the casino, sets the odds. You either take them or you leave them. In a prediction market, you, the participants, discover the price through your own buying and selling. And here's the real game changer. You are not locked in. If new information comes out, guess what? You can sell your position. This totally transforms it from a simple bet into a dynamic tool for gathering up information. This quote from a user really gets to the heart of this wisdom of the crowd idea. When there's actual money on the line, people tend to express what they truly believe will happen, not just what they hope will happen or what they think they're supposed to say. It has a way of filtering out all the noise. So where can you actually do this? Right now, the landscape is basically split into two main camps, and they're defined by how they deal with regulation and technology. So on one side, you've got platforms like Kalshi. It's regulated by the CFTC here in the US. That gives you legal clarity, a sense of security. But then on the other side, you have decentralized platforms like Polymarket, which are built on the blockchain. This opens the door to pretty much anyone, anywhere in the world, but it means you're operating in the world of crypto wallets and self-custody. It's a classic trade-off, really. Regulation versus freedom. So yeah, the bottom line is this philosophical divide. Your choice really depends on what you value more. The protections that come with a regulated system, or the open, global nature of decentralized finance. It's kind of like the difference between a traditional stock brokerage and crypto exchange. So let's zoom in on that decentralized side for a second. Why even go through the trouble of putting a prediction market on a blockchain? What's the actual advantage? Well, first, there's something called trustless settlement. It's a fancy way of saying a smart contract, which is just a piece of code, handles all the payouts automatically. No middleman needed. Second, you get global access. Using crypto tokens means anyone, anywhere can participate, even with tiny amounts of money. And third, user security. You hold your own funds in your own digital wallet. The platform can't touch them. You are literally your own bank. But of course, it is not a perfect system. Not by a long shot. Both regulated and decentralized markets face some pretty significant challenges that we need to be really clear-eyed about. The biggest shadow hanging over all of these markets is regulatory uncertainty. I mean, the rules are still being written as we speak. Then there's the problem of thin liquidity in smaller markets. It's like trying to trade stocks in a ghost town. And of course, there's always the risk of manipulation. And finally, and this is a big one, how do you decide the final outcome? If the source for the final answer isn't crystal clear, the whole thing can just fall apart. But, Maybe the biggest hurdle of all is just perception. To a lot of people, this whole thing still just feels like a novelty, like a really complicated way of betting on the Oscars. Overcoming that image and really showing its value as a forecasting tool, that's the key to wider adoption. So what does the future hold? What's it going to take for these markets to move from being a niche hobby for finance geeks and crypto enthusiasts to being a mainstream tool that everybody uses? Well, I think it boils down to three main things. First, you need clear rules of the road from regulators. No more guessing games. Second, you'll need to see them integrated into the apps you already use every single day. And third, they have to be as dead simple to use as placing a bet on a sports game, but with all the power of a real trading platform underneath. And this quote is the perfect way to think about their ultimate purpose. The goal isn't to create some flawless crystal ball that never gets it wrong. The goal is to create a system that rewards people for finding and incorporating good information into the market price faster than anybody else. So here's the big takeaway. Think of it as a living, breathing poll, one that's constantly updating in real time as new information comes out. And the financial incentive, the skin in the game, that's just the mechanism that keeps the whole conversation honest and focused on what's real. Which brings us right back to our central question. As these platforms get bigger and more influential, are they going to become an indispensable tool for understanding the world and cutting through all the noise? Or do they risk becoming a new, powerful way to shape public perception itself? That is the billion-dollar question that the future is going to have to answer.